Hey, this is Matt from InvestiQuant. Today is Friday, November 19, 2021. Today is options expiration day for November. So what we'll be looking at today is going to be putting a little bit of context around this recent run that we've had. Yesterday we closed up pretty strongly, up at all-time highs on a closing basis. Definitely the highs of the week on a closing basis as well, with that being the case. So we're going to put those two ideas together and see what has happened here historically on options expiration day after a strong move higher. So I've got all four instruments selected here. The setup's going to be based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading lower. We had a nice move higher that has collapsed, and we are trading down near the lows of the overnight session as of the time of this recording, which is below yesterday's closing price, still within yesterday's range. I'll go ahead and add that as well. We'll say it's going to be a gap down within the prior day range, so that's something you need to confirm at the time of the open to see if this is going to be applicable or not for today. But it looks like as long as we're trading down, at least for the S&P, it's very likely to be within the prior day range. I don't think NASDAQ's still trading up at the time of this recording, but the others are trading down within the prior day range. So you'll want to check that on your own. Next, I'm going to go into the price patterns library, and I'm going to go with this day after a 5-day high close here. And I'm using the 5-day high close. That puts you up at the high of the week. But if you start going bigger than that, I could have gone with a 52-week high or 50-day high, whatever. It's just going to be fewer samples. So I want to keep as many samples as possible since this only happens once a month for options expiration day. So I'm going to go with 5-day high close. And then next, I'll put it in a similar market environment. Put it above a 200 and a 10-day simple moving average. Lastly, the market event. Today is options expiration day. So I'm going to grab that from the active today. I'm going to say options expiration day right there. I just clicked on it. It comes from this middle option, market events down there, 2/3 of the way down towards the bottom. And that has been added to the test. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap down within the prior day range on options expiration day, and the prior day closed at a 5-day high, so it closed up at the highs of the week and above a 10 and 200-day simple moving average. Now, historically, we've got 20 samples here in the S&P dating back to 2003 for this pattern. The NASDAQ has 25, the Dow 24, the Russell 23. And if we look at the win rates on them, they're kind of mild is where I would put that. So S&P just a little bit weak, 45% of the 20 samples. That's not far from 50-50, especially considering only 20 samples. The NASDAQ's the weakest of the group at 40%. Dow 50%, Russell 52%. So those win rates are just a touch weak here, not all that week. We've seen other OPEC studies which are certainly weaker than the one that we're seeing right here. If we look at the average moves, the average loss larger than the average win here in the S&P. That is a bigger ratio of loss to win there for the NASDAQ. That's the weakest of the group for this pattern. For the Dow, average loss larger than the average win by quite a bit. And then the Russell, kind of like the S&P, just a slightly larger average loss compared to its average win. So historically, the average losses are bigger on this pattern compared to the average wins. The win rates on them, which is telling you what percentage of them have closed above the opening print, is fairly neutral. As a group, NASDAQ's the only one that's kind of weak here. ES, which is just barely under 50-50, so not all that weak, but kind of neutral win rates there, but the bigger moves have taken place on the downside. This is not the most bearish study I've seen for options expiration day. There's certainly others that are much more bearish than what we see here. So anyway, I hope you found that helpful. Good luck today, and we will see you next time.